what's a difference between a sophisticated investor and someone who's just starting off or doesn't have the savviness? Interest rates, as an example. Like I get asked this question all the time. Like, Joe, do interest rates make a difference for you in your investing like decisions? And my response is no. Actually, what interest rates do is they eliminate the competition. Because most people are looking at, what does this thing look like today? What you have to realize is you have an asset that's permanent. This interest rate is temporary. So you're allowing this temporary factor to ultimately make a permanent decision for you on whether you acquire something or not. So you and I could be looking at the exact same thing, and through a different lens, I will ultimately come to a different conclusion, or I can take this and figure out, how does it apply in my portfolio, and how do I strategically piece this thing together so it can make sense for me in the long term and not get caught up in the small factors that are considered temporary. So like, that's a perfect example of, we could be looking at the exact same thing. And I've seen this. I've seen investors go out into the marketplace and like, man, now's not the time. They're spectators. That's another difference. I'm thinking of like, answering your question of like, what are the differences? Wealthy, savvy, sophisticated investors, they're never spectators. I'm never a spectator. There's never, hey, let me kind of just wait till the markets make sense. No, there's no waiting. And actually, I was thinking, like, for example, a lot of people ask us, why are you investing in houses if the interest rates are so high? And like, okay, because as you said, it's not the only thing to check. I mean, you have to consider so many other things, because at the same time, when you have the interest rates like these, prices are going down in so many places. I mean, we have talked about it, like, for example, Austin, that has lost like 25% of the value in so many houses in the last 3 years. Why? Because when the interest rates were so low and everybody was moving to Austin, okay, let's develop a crazy amount of houses. Now you have all this supply. Who is buying them? Who is renting them? Nobody. Okay, now the prices are going down. So, but it could be a good opportunity in some cases for investors that see it long term, not only I'm going to make money today. See, as you said. I'll tell you this, from my perspective, I love when interest rates are high, because like I said, what that does is it eliminates the competition. A lot of people are on the sidelines. They're spectators. And what does it do for someone like me? It gives me the ability to negotiate. It gives me the ability to structure an asset. Imagine this. I'm buying this property, and now as the buyer, I have the leverage. I can negotiate, because you get a good percentage of the population that's just sitting there waiting for markets to turn. So I get to negotiate. I now tie this deal and put it into my portfolio. Well, ultimately, what happens when interest rates do go down? When people are fighting for what is available, I've already tied up a massive portfolio. And what am I able to do when interest rates go down? Because ultimately, most of the time, my portfolios end up going up in value. I can now just refinance the equity that I have tax-free.
Exactly.
But the guys that are waiting on the sideline, because they're looking for cheap, discounted property, and they're not looking to build portfolios with all these other factors that they're considering, they're not thinking of the tax implications. Like, none of that stuff really is part of their formula, let's say, because they don't even have a formula.
Yep. And that's something that happened, for example, Latin America, with the interest rates for mortgages so high, and the value of the houses being so high as well. People get so much concentrated on trying to get a discount on the price so they can make out of it some kind of money in the long term. And people are just thinking about the appreciation or the value of the house, but there's never a thought on cash flow because your mortgage is all going to be always higher than when you can charge in rent in the U.S. In cases, I don't want to say all the time, but in cases you can kind of flip it backwards and okay, I'm going to have cash flow. And yes, I'm going to get appreciation.